Hi, this is Matt Aarons with Integrity Advisory. Wanted to, first of all, just start by saying I hope that you and your family are staying safe and healthy during this unique and incredibly challenging time. I wanted to make this video to touch base with you to talk a little bit about where we've been the last 4 to 6 weeks in the stock market, where we're at today, and where we think we're going over the next 4 to 6 weeks. And then last, just wanted to touch base on some mail you've probably been receiving around transaction confirmations and proxies. So, we keep throwing around the term historic for the last 4 to 6 weeks, and the drop that we saw. We saw about a 38% decline in the S&P 500 in just 23 trading days. And that, by all measures, was incredibly historic. We had the worst quarter for the S&P 500 since 1987, and that, understandably so, was incredibly painful. Now, since that initial drop, we have recovered probably about a third or so, slightly more of that drop. Also, in a very short period of time, it was very much a V-shaped recovery up until now. Kind of our expectation for the next 4 to 6 weeks is that we start by maybe just moving sideways for a while. There's this battle at the moment between bulls and bears, where one side thinks it's going to drop further, another side thinks there's opportunity. Let's buy, and so we're likely to see a lot of what we've seen the last couple of days, where you'll have one day that we're up, another day that we're down, and it'll keep kind of moving sideways without making a whole lot of progress. I do want to point out, though, we've had a couple of days here where we had announcements around unemployment numbers. So we had one day where it was announced there's a little more than 3 million people that were unemployed. Then just yesterday, over 6 million people were announced unemployed. And on both of those days, the stock market actually went up. Both those days were also record days, record numbers, and the market responded yesterday by going up about 3%. So there is this kind of irrational feeling going through the stock market at the moment. Why are we going up so much when we have such bad numbers in front of us? And we think that does kind of lay the groundwork for the next 4 to 6 weeks, where we should see some continued volatility. It's possible we could retest the lows that we've already seen in the last month, but short term, probably not a lot of movement. After that, we may retest those lows because there's going to be a lot of headline risk. And right now, our headline risk is all related to COVID-19, and then potentially if there's any companies that start to lay off more workers or start to declare bankruptcy. There's a lot of risk to the stock market on the headline side. In the bond market, we've actually seen a lot of stability in the last week or so, and we think that is setting up for some positive signs in the bond market going forward. But the stock market has a tendency to kind of overshoot to the downside and react a lot to those headlines, even though we haven't seen that lately around unemployment numbers. So we just want to kind of lay the groundwork that the next couple of weeks are probably going to be very volatile as COVID-19 kind of hits its peak across the country, and especially in hotspots like New York City and New Orleans, etc. So just be aware of that. Even though we're working remotely, if you have any questions about the stock market, we've been talking to a lot of clients on the phone. We've been doing a lot of Zoom meetings. Happy to have conversations and answer any questions that you have about the market or about your account in particular. We have raised a decent amount of cash just to have some dry powder on these volatile days that we can find better entry points to get back in. It's pretty much the only lever that we have to pull is inside of these allocations. We have what are called exchange traded funds, or ETFs, that are very liquid. They trade like stocks. We can push a sell button and it can go to cash. So we don't normally override the models in that manner, but as a fiduciary, we feel like if you're going to get hit by a train, we should probably push you out of the tracks. Not to say that a train is necessarily coming, but we do think there's going to be an opportunity for a better entry point down the road. So we have raised some cash, and that means you've received some transaction confirmations in the mail. If you have any questions about anything that we've sold, we're happy to answer those questions for you. But we wanted to be opportunistic and be able to get back in the stock market as things have dropped. It is interesting. People look at Warren Buffett a lot. I told somebody the other day that we'll know that we've hit the bottom when Warren Buffett buys a company. So far, we haven't seen any of those announcements come out yet. In actuality, Warren Buffett lately has been raising additional cash by selling some bonds in the overseas market. So he's on the hunt to buy some companies, and we'll be looking to deploy our cash as well. Some of you also receive proxies in the mail. We don't vote proxies, so you can feel free to toss those if you want to. If you want to vote, you're allowed to, but it's more than likely that none of our clients probably have enough shares in those companies to really sway a vote one way or the other. So we typically would suggest that you just toss or shred those proxies. We're gonna go. Yeah. See. Say hi. Can you wave? Can you wave? Yeah. You take your binky out. Say hi.
Hi.
You gonna do one of these with Daddy real quick?
Yeah.
Okay. Yeah, keep your binky out.
Book. Book.
Can you help Daddy?
Book.
You gonna show your book off?
Hi. Book.
You got a book. Yeah, look, what is the book? Animals.
Amen.